Hello everybody, welcome to another one of my investing videos. My name is Mark, and in this video, just like clockwork, I bought to close my weekly call that I sold to open a few days ago. Let me go ahead and bring that up so you can see the transaction here. So here's the call right here, $35.50, and I sold to open on the 30th. Today is the 2nd, actually it's the 3rd. I'm doing this in the middle of the night. Market has been closed for a while, and I bought to close this call option a few hours ago for the whopping price of $1. Okay, and so I made a clear profit of, looks like $19, almost $20, $19.29, and you may be thinking, oh, whoop-de-doo, what's the big deal? You're only making $19. Well, I'm making that $19 on a weekly call. Now, how many weeks are in a year? The answer is 52. So what is 52 times 19, right? That's over $1,000. So if I'm making over $1,000, look how small my account is. I have $2,681.45. So if I make $1,000 here in the next year, this will be worth $3,681. So what kind of return is that? That's what, 40% return? Is that right? Let's see. No, 20% return. I mean, I'm getting a little bit exaggerating here. 20% return, right? 265, 20, almost a 20, maybe like an 18% return. That's pretty good, and that's only making $19 a week. But back to my transactions here. What did I do after I bought that back for $1? I immediately sold another weekly call, sticking to my plan. My target for Twitter is $35 a share, so I sold a $35.50 call, and premium was $56 minus commission, $48.29. Now we're talking, right? So if Twitter stays below $35.50 between now and when it expires, which would be the 9th, right? That's a week from now. Then I will buy this back probably for $1, maybe $2, I don't know, but probably for $1, and I'll turn around and sell another one. And if I make that $48.29, then that would be $67. Now my average goes up to what, $33 a week? So 33 times 50, now we're talking $1,500. So it gets better and better, doesn't it? Now if Twitter goes higher, right now, let's go ahead and pull up Twitter, and Twitter closed at $34.30. Now if Twitter goes up to $35.50, then guess what I'm going to do? I am going to sell to close this contract right here. This is my $30 call that I bought back on September the 10th for $770. Now as you can see, the bid, which is right there, $9.90, the ask $10.40. So the $770 call is now worth over $1,000. Now if Twitter goes up, which would over $35.50, then this call will be worth over $1,100. And so I will sell to close this call option. And then what I plan to do, let me go back to my account here, is I'm going to buy another put. Okay, I bought this put option because I didn't want to sell another weekly call, because I wasn't sure if Twitter was going to go up or down. Twitter had a good earnings, and they went up a lot. If we look at the chart on what happened on the earnings was, what, a week ago, back on the 25th. Pull up the chart here, and let's go ahead and go to the 10-day. Would that put it? Nope, that's too far. So here's the monthly chart. So there you go right there. And this is day, but look at the move that it made. It was down to like the $28, $29 range, and now it's all the way up to $34, and this is all earnings, right? And this is in a market, in a world full of uncertainty, full of volatility, and also if we look at the S&P, let me pull that up, the SPY, and let me pull up the chart on this, and let's look at what happened here in just the last few months. Okay, this is what's been going on. The market overall, the S&P 500 has been tanking, right? If we pull up the trend lines here it was up to 290, and then it just, the bottom fell out, right? It just kept going down, and there were all these sell-offs, but not Twitter. Twitter went up in this crazy market, and so when it did that, I thought, okay, is Twitter going to keep fighting the trend, or is it going to come back down to reality? And I didn't know. So that's why I did not want to sell another weekly call. I thought it would be better for me to buy a put option, and I was right. So when I bought that put option, Twitter kept going up, and it's where you see it now. Let me pull back up Twitter here. Twitter kept going up, and if I pull up the chart here, let's look at the 10-day chart. Twitter has been slowly creeping up, and so when I bought that put option, when did I buy? Let me go ahead and pull up my transactions here, and let's see, when did I buy that put option? October. Click the view, and here's the put right there. Okay, that's a $32 put. I spent $767, and that was back on the 26th. So today's the 3rd. That would have been a little over a week ago, maybe a week and a half ago. And so on the 26th, let me pull up my trusty TradingView. TradingView is the website that I like to use for my charting. Let me pull up Twitter here, and let me go ahead and pull up the chart here, and let's go ahead and reset all of this, and let's put in a 1 month chart. And now let's go to the 26th. Here's the 26th right here. Let me pull up my drawing tool. So this is actually, let me go ahead and put it on daily. So this is a 30-minute. Let me put it on a 1 day. There's a 1 day. And now let me go to the 26th. So let me go ahead and pull up a month, and it did it again. Let me try putting in 1 day here. Okay, so that's what it's going to do. So I guess what I need to do is to do a zoom. So let me go ahead and pull it over and click on the zoom, and where is the 26? It would be like right around here. So let me go ahead and zoom all that. There. Now we can see it nice and crystal clear. So this would have been the 26th. So on the 26th, Twitter was somewhere in the $31.08, and this is the candle right there. Okay, that's the candle right there on the 26th. So it was somewhere, the high was at 32.31 and the low was at 31.22, and that's the day that I bought my put option. Okay, now had I would have sold another weekly call, then all of this little uptick I would have missed out on, because my call option, my short call option, would have also went up in value. So even though my $30 call was going up in value, it would have been canceled out. So that's why it's a better idea when you're not sure and you feel that the stock is going to go up or down in a big way, or even in kind of a big way. It's better to buy a put than it is to sell a call, because when you buy a put, the stock goes up. The loss that you can take on a long put is limited. The most money that I can lose on a long call or a long put is the premium that I spent. And in my case, I spent $767, so the most money I can lose. But the call, if it goes up to $50 a share, then I make all that money if I didn't sell the call. But I have a target price. One of my philosophies, one of my mantras is I don't buy and hold call options or put options. I do not buy and hold stock options hoping that it goes up to $1 million a share. I set my targets, and I set it at levels that I feel will make me a nice profit, and $35.50 is a nice profit for me. If Twitter goes up to $35.50 a share, this $30 call option that you see right here, the bid $990, the ask $1040, so let's say it's worth $1,000, a little more, will go up to over $1,100. And then my $770 call, I will sell to close this at $1,100, and I will make about $350, maybe even $400. Now if I make a $400 profit, let me go to my transactions here. Let me go back to my put option, the put that I bought, here's the put. I spent $767.71. Now imagine if Twitter goes over $35.50 between now and the next 7 days, and I'm able to sell to close that $30 call, and I make let's say even a $350 profit, then I can subtract that off the cost of this, which will bring it down to $767 minus $350, which would be $417, and this put option is good all the way till January of 2021. That is 26 months from now. So imagine how easy it will be for me to sell weekly put options. And what I plan to do, and this will be my, like, as I close out this video, what I plan to do is sell to, I'm hoping that Twitter goes over $35.50. That's why I'm selling these weekly. Actually, I'm just hoping Twitter goes above $35 a share. That's why I'm selling these weekly calls at $35.50. If Twitter goes up to there and I'm able to get out of that $30 call at a nice $350 profit, then I subtract that off of the $700 and whatever dollars, brings me down to like $400 and something dollars. My memory is going fried here, so let me look at my put option, the money that I spent. Let me put in the October here, and so I spent $767 minus $350, so $417. I only have to pay $417 until I'm playing with the house's money, until it's paid for, and I have 26 months to do it. 26, how many weeks are in 26 months? That's what, 102 weeks. Imagine if I'm making $10 a week. Even if I'm only making $10 a week times 102, that's $1,000 on a $417 debit. So I'll make a clear profit, and that's only making $10 a week, right? But this call right here, I'm making $48 a week if I'm able to buy this back for $1. So hopefully you can see the tremendous potential to make a lot of money, and this $2,681 hopefully in a year from now will be worth $4,000 or $5,000 or even more dollars, right? What a great return on my money that will be if I'm able to do that. So that's my plan, and to sell to close this, and then I'm going to buy another put option with the proceeds that I get from this call. So if I have $1,100 extra dollars, then probably what I plan to do is to, and let me pull up Twitter, is I'm going to buy another put option. And the put option that I plan to buy will be another 2-year, and I'm probably going to buy this $35 put. And if it goes up, if Twitter goes over $35, this put option that you see here will probably drop down under $800. I'll probably spend pretty close to the same price. I might spend another $780, and then I will do the put option butterfly strategy. I will have a $35 put, and I will have a $30 put, and I will sell put options weeklies at the $33 or $34 strike price. I will pay off this lower put like grease lightning, and the higher put I will pay off. Maybe it'll take me a few extra months, and then I will make clear profits very quickly. So hopefully, I know I'm talking a lot and I'm talking fast. Hopefully I'm not talking too much over anybody's head, but hopefully what I want people to see is the tremendous advantage that you have as an option trader. Time and leverage. People that buy stocks, they don't have those advantages. The reason stocks, they don't expire, there's no time limit to them, and there's no leverage to a stock. You just buy the stock, you own the shares. But when you buy a call or you buy a put, you spend $700 to own the right to buy or sell 100 shares of Twitter at $30 a share. I mean, are you kidding me? Which is better, to spend $770 to buy a call option, which is a contract to buy Twitter at $30 a share, or would you rather pony up $3,000? I mean, that's called leverage, and that's the big advantage that I have as an option trader. People that just buy and sell stocks, they don't have those advantages. And then you use those advantages to your favor by buying leap calls and selling weeklies, and by using that imbalance, well, you can see for yourself. Okay, the money is growing, and hopefully a few months or maybe a year from now I'll have maybe 4,000, 5,000, or even higher, and we'll see how far. We'll see how far that all this takes me. Maybe I'll be a millionaire in a few years. I don't know. But one thing is for sure: this is a game-winning strategy. It is a profitable strategy. I hope that I'm piquing your interest, and I hope that you get involved investing in stock options. Thank you for watching this video. As always, if you have any questions or comments, leave it in the comments, and I will see you in the next video.